Stock Market Series Part 2 Terminologies. Part 1, which is the basics of stock market, link is given in the description. If you have not watched the video, please go ahead and watch the video first so you will understand what is stock market, what is NSE, BSE, why does a company jump into a stock market, how do they actually convince SEBI to allow them to jump into the stock market, and of course what is Nifty and what is Sensex. The basic foundation is given in the first part and the link is given in the description. So here in the second part, we are going to familiarize ourselves with the terminologies which are very commonly used in stock market. If you have to write English, you have to know A, B, C, D. Likewise, if you have to become an expert in stock market, you have to know these terminologies because they will be used everywhere when you jump into stock market. Hello and welcome back to Freedom English channel. This is Sanaram. So let me start off with the first word, and that is share. When you buy a share of a company, you are buying a partial ownership of a company. For example, I have a company called XYZ Limited. You are buying a share of my company. You are actually buying a partial ownership of my company, and that is called share. Second one, share price. I'll give an example here. I have a company XYZ Limited. I want 1 crore in order to expand my company. So I am jumping into stock market and offering shares to the public. So here I am offering 10 lakh shares. So 1 crore divided by 10 lakh is equal to 10 rupees, which is 1 share price. And that per share price is called a share price, which is 10 rupees here. So when the public buy all the 10 lakh shares, I have got my 1 crore. If I use this 1 crore properly and if I make profit out of it, and if my company grows, then the share price increases. If I get into loss, the share price decreases. So basically, the share price is the price of one particular share. Third one, who is a shareholder? If you have the share of my company, you are a shareholder. And if I have share of Reliance, then I am a shareholder of Reliance. Okay, here the next question will arise, which is, what is the difference between share and stock? I would say it is more or less the same. But there is a small difference, and that is, if I have the shares of one company, which means, for example, you have the shares of XYZ Limited alone, then those are called shares and you are called a shareholder. But in case if you have the shares of XYZ Limited and then of Reliance and then of Tata, which means you have shares of Tata, you have shares of XYZ Limited, you have shares of Reliance, then all these together are called stocks and you are called a stockholder. So that is the difference, and I would say more or less the same, which is stock and share. Sixth one, listed companies. Any companies that are listed in NSE or BSE. NSE is National Stock Exchange, BSE is Bombay Stock Exchange, are called the listed companies. In order to buy the shares of these companies, you can use Zerodha, Upstock, Paytm Money and many other portals. Seventh one, unlisted companies. I would say my company is an example here, Suvishin Holdings Private Limited. It is not listed in NSE and BSE, so it is an unlisted company. But that doesn't mean this company doesn't have shares. It has shares as well, and I'll tell you why in the next point. So eighth point is, what is a face value? In order to understand that, I'll give you a small example here. My company XYZ Limited, I need 1 crore in order to start my company. I have 60 lakhs in my hand. I need 40 lakhs. Either I can go to a bank, but if I go to a bank, I need to pay interest. So I'm keeping the banks aside. I'm going to investors. I'm approaching them. I'm giving them the business plan. They are very much impressed with it, so they are ready to invest. I have 4 investors here and each are investing 10 lakh. So I have got my 1 crore in my hand. And these investors, they need a proof, right, for the money which they are investing in my company. What are we going to give them as a proof is the shares of the company. So 60% of the shares is with me, 40%, 10% each is being given to the investors as the proof of the money which they have invested in my company. So coming back to the face value, I needed 1 crore in order to open my company. And my company has 10 lakh shares. So price of 1 share is 10 rupees. And that is called the face value, which means any company which is not listed in NSE and BSE and it creates shares. Price of each share is called the face value of the company, which means here face value of XYZ Limited is 10 rupees. So continuing that, I needed 1 crore in order to open my company. As I said, I had 60 lakhs in my hand and 4 investors have invested 40 lakhs, which means 10 lakh, 10 lakh, 10 lakh, 10 lakh. So 60% of the share is with me. 40% has been divided and given to them. Here, price of one share is 10 rupees. So they have 1 lakh share each. I have 6 lakh shares with me. So 1 lakh into 10 is equal to 10 lakh, which is their investment which they have done, which we have given as a proof to them. Here, that 60% which I have is called the promoter holding, which means as an owner, I hold the 60% shares of the company, and that is called the promoter holding. So the next word you have to familiarize yourself with is IPO, which is called the initial public offering. Here, my company is doing really well. My products are having demand. So I want to expand my company. In order to get the fund for that, I will jump into IPO. So I have to send an application to SEBI, which is the regulatory body. SEBI is nothing but Security Exchange Board of India. So I will be sending a booklet to SEBI in order to get the confirmation, or I would say thumbs up from it, stating that you can jump into stock market. So this booklet contains all the information about my company, which includes who is the CEO, who is the manager, when it was started, what product am I selling, how am I going to get the sales, what is going to be the profit, everything will be there. So SEBI, after reading the book line to line, page to page, will give me a confirmation and say this will be the date when this company jumps into IPO, which means that XYZ Limited is going to go for initial public offering and people can actually buy the shares. And here comes the primary market. So what is the primary market? My company is not yet listed in NSE or BSE, which means XYZ Limited is up for initial public offering. People are buying the shares and the money directly comes to the company, which means me, XYZ Limited. It is not yet listed in NSE, BSE, and this part or this process is called the primary market. Secondary market is nothing but when this company gets listed in NSE or BSE and people are buying shares from that using Zerodha or Paytm Money or Upstock, then that is called a secondary market. So IPO, primary market, secondary market. The next one is follow on public offer, which is FPO. So basically, XYZ Limited got listed in NSE or BSE years before, maybe 4-5 years before. But again, now I'm in need of funds. So I will offer my shares to public again, and that is called follow on public offer, this process. The next one is market capitalization. This is basically the total value of the company, and it is calculated using a formula, and that is the total outstanding shares into present share value. For example, I will say the total outstanding shares is 10,000 and the current share price is 100, which is equal to 1 lakh, and 1 lakh is the market capitalization of that company, which means the total value of the company. Next comes our large cap. So large cap is the top 100 companies which is listed according to the market capitalization. These large cap companies stocks are called the large cap stocks, and the market capitalization of these companies are more than 20,000 crore. So this is large cap. Next one is mid cap. Mid cap companies are listed between 101 to 250. The market capitalization of mid cap companies are more than 5,000 crore and less than 20,000 crore. And these stocks are called the mid cap stocks. Then comes the small cap companies, which are below 250 in the listing. And here the market capitalization is less than 5,000 crore. And these stocks are called the small cap stocks. The next word is equity. Equity is nothing but the stock market and the shares. And the next word which you should get familiarized is demat and trading account. Before, when we were buying shares, we had physical paper, which means we can touch them, we can feel them. But now everything is electronic because the technology has evolved. So now if you want to buy or sell stocks or shares, you will need demat and trading account. The next word is investment. When you buy a share and keep it for more than a day, then it can be for a year or two or more, you are actually investing in it, which means you have invested 100 rupees in a share. Maybe after 10 years, it is 1,000. You have actually invested 100 and you have got profit out of it. So this process is called investment, which means you're holding the share for more than a day. But when it comes to trading, you buy the share and immediately you sell it off on the same day. When it comes to investment, you have to do the fundamental analysis, technical analysis, and understand which is the right place where you can buy the share, where you can keep the money. But when it comes to trading, we need not do all these analysis. We have to have a keen eye and understand which is going to raise and which is going to go low. And when the price hits a little bit of hike, maybe you're buying it for 100 and you're selling it for 103, 3 rupees is your profit. This is how it works, and this is the difference between investment and trading. Then comes the market order. Market order is nothing but you are buying or selling the share in the price which is given in the market. You're not changing it. You're not waiting for a price. If it is 100, you're buying it for 100 or selling it for 100. This is called a market order. But when it comes to limit order, you are actually setting a price there. For example, you have a share and you want to buy the share when it reaches 90, but till now the share price is 100. So you will select this limit order option, you will write 90 there. So when the price actually comes down to 90, automatically it will buy. So this is called a limit order. So the difference between market order and limit order is, market order is nothing but you are buying or selling it on the price which is listed in the market. But limit order is you are setting a price and you are waiting for the price to reach that price, and when it reaches, since you have set the price already, automatically it sells or buys the share. The next one is good till cancelled, which means GTC. Here few brokers offer these options. They will give you a timeline. When it comes to limit order, it is only valid for a day. So every day you have to change. But here, when the broker is giving you a specified time, which means can be 10 days or 30 days or 90 days or 100 days, you can actually set that value which you want there, and it will be set till the stipulated time which they have given. Which means you want to buy the share for 90 and the broker has given you 30 days time, that 90 will be there for 30 days. And in between, if any day the share price comes down to 90, automatically it will be bought. So this is the difference between limit order and good till cancelled. So good till cancelled is offered only by few brokers and not by everyone. So check and then decide. Next word is multi-bagger. Multi-bagger is nothing but a share which has grown tremendously, which means it was in 100, it became 200, 500, 1000, 10,000, it just keeps on growing, and that is called a multi-bagger. The next word is stop loss. Let us assume you have a share. The share price is 1000, you have set this stop loss at 900. So whenever this share's price goes down to 900, automatically this share will be sold, which means it will stop you from facing more losses. So basically, in order to control the loss which you face, we can use this option of setting stop loss. The next one is bull market. Bull market is nothing but stock market performing really well and has got more than 20% profit. And bear market is nothing but stock market facing a lot of losses and it goes down by 20%. So bull market is profit in stock market and bear market is loss in stock market. The next one is dividend. So a shareholder is paid by dividend. For example, my company makes a profit of 1 lakh and dividends is going to be 30%, which is 30,000. And I have 10,000 shareholders. So per share you will get a dividend of 3 rupees. I can pay you through rupees, which means cash, money, or I can give you extra shares. That completely depends on me. So basically, dividend is nothing but a profit share by the company to the shareholders. The next one is PE ratio, which means price to earning ratio. I'll show you the formula here. PE ratio is equal to share price by earnings per share. The share price is 100, earning per share is 10, which is equal to 10. So PE ratio is 10, which means I have paid 10 rupees in order to get a profit of 1. PB ratio, price to book value ratio. I'll show you the formula here. So PB ratio is equal to market price per share divided by book value per share. Share price in market is 100, book value is 10. So 100 divided by 10 is equal to 10 is the PB ratio. I have explained this in detail in the next parts. So do continue watching the next parts. Now I'll stop it there. The next word which you have to get familiarized here is 52 weeks high. This is nothing but when a share price reaches the highest peak, which means it has touched 10,000 per share price in 52 weeks, that is called 52 weeks high. And the same thing applies to the lowest, which means 52 weeks low. If it has touched the rock bottom of 1000 and that is the lowest or the least it has touched in 52 weeks, it is called 52 weeks low. So basically we have got familiarized with 34 terminologies which are commonly used in stock market. So with this, I finished my video, and if you want to get in-depth knowledge of stock market, all you have to do is install our Freedom app and register yourself. Not only stock market, we have so many courses available in personal finance, farming and business, more than 1000, and we have mentors who are going to teach you everything from A to Z. Just find what interests you, open the module, learn everything from the course, understand it, implement it in your life and change your life. With this point, I conclude my video. If you like this video, give a thumbs up. And if you think it will be beneficial for others, go ahead and share. And if you have not watched part 1, I have given the link in the description. Go ahead and watch it. I'll catch you again in the part 3. Until then, you guys take care and bye-bye.